The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Robert in New Jersey. Hey, Robert, what's going on?
Hey, Tom. A great show.
Thank
I've
you
listened
so
to
much.
you for years. You got a great thing. I've been listening to you for over a decade. It's amazing. You've done a great job.
I appreciate it, man. Appreciate you growling and prowling out here with us.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. It's a TGIF, folks. Let's make it a great one. This is a quote unknown. Dare to believe. That's a beautiful thing, folks. Yesterday's gone. Tomorrow's not here. What are you doing right now? Market-wise, let's take a look at it out here. We had the Dow Industrials close down 60, NASDAQ off 20, S&P's off 4.5. All failures at the high. We'll go through that. Gold contract got smoked. That's down $27.70 at $1,235 an ounce. Silver off 48 cents at $16.71 a barrel an ounce. Platinum down 29 at $1,224 an ounce. Copper flat at $2.58 a pound. Light sweet crude up $1.55, trading at a price point of $52.03. You got the bond market. Now, the bond market, folks, we're going to slice and dice up here because it's going to be a close one. You had the 10-year down 1 point and 10 ticks at 128.17. You had the 30-year off 1 full point and 14 ticks at 147.14. And King Dollar was up a full point and 68 ticks at 94.80. The euro was down 1.59, and the yen was up 1.44 at 118.97. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, let's take a look at them. Let's first take a look at the future. And what you're going to see in the future is this, folks. What we did is that we failed on the daily. We failed on the weekly. And what you have is that we're at the top of the consolidation. We got to a price point out here today of 2068. We closed at 2050. It had got over the swing point from the 23rd, which was 2062. We had got over the swing point from the 9th, which was 2062. We closed underneath them. We did it with lighter volume. If we just go to look at the SPY, what you're going to see with the SPY is this. The SPY did 113 million shares. That 113 million shares was going into the last high that was established up there was 174 million. The prior high before that, you were dealing with, I guess the biggest one is 257. So you can see what this correlation is. That's not the swing high. The high of the market, however, was December 18th. That is where we basically, we did go up to 212. We gave it up, went to 203. You had 257 million shares there. Next high that was generated out here was on the 9th. That was 156 million shares. The next high generated on the 22nd, that was 174 million, and you can see what happens. You're dying on the vine out here. That's at the highs. You want to look at this correlation at the lows because what we've been doing is that we've been building cause for lower price. How do we know that? Well, if we take the first low that was generated out there, which was on December 16th, that low had 259 million shares. Your next low that came in was on January 15th. That was at 178 million shares. The next low was just last week, Monday at 163. So now what are we going to do? Guess what? Now we're going to go after those lows. We'll see what type of volume we have as we come into that lower price point. We look at the NDX 100. We go to the 3 Qs and we look at the 3 Qs. What we have with the 3 Qs, same type of phenomenon. What we did out here today, excuse me, folks, 3 Qs did 30 million shares. We got to a price point of 104. 104.17. Now, the 3Qs didn't even make it to 104.58, which is the last high. That just says how much weaker the 3Qs are. 3Qs, the three bottoms that we've had thus far was December 16th. That was 65 million. It came down again on the 6th of January with 66 million. Monday we came down, and we came down with 43 million. So you can see that correlation. Heavy pushing down at the bottom, very light at the top. What that's all about is just like a hammer, folks. A hammer is banging on the bottom floor, and it wants to break through. Where's it want to break through to? It wants to break through this October 15th swing low. The October 15th swing low inside the 3Qs is 90.24, and we're at 103. So that's a monster number. We go back to the SPY again. If you want to see, if you think this has been volatile, stay tuned. Because the SPY, folks, we're at 205. The October 15th swing low in the SPY is 181. Now, gold contract. Let's get over to gold and look at gold. They toasted, roasted gold out here today, but they didn't get the juice going with it. They got basically some juice. They got wide price spread for sure. What did gold do out here today? Gold goes from a price point of $12.69 to $12.28. It closed out at $12.34. You were coming into a 234,000 contract day. So we did 187, which is big, by the way, but we didn't do more than how we went top-sided, 1227 to 1268. So we have here, when you get a day like today, you're going to have to build cars once again in order to get to higher price. Bonds. Now, this is the market, folks. And, at the first hour, I was basically saying that, listen, this is the first time that, in a long time, let's put it this way, it's the first time in a long time that I was looking at the bonds and I'm saying to myself, okay, can this be a high? And of course, it always can be a high, it always can be a low. What we had is this. The 10-year is down 1 point and 10 ticks. We came down with 1.7 million contracts. Now, that's a big number. However, it was coming into 1.9 million. So you still have lighter volume, but when you do come down this hard, this is how you're going to be able to basically get a decent probability is, will this baby still go higher? If we get an expansion of volume on Monday and you do come down on price, that would basically be a huge heads up that, guess what, the 10-year might have topped out. I don't think you're going to get that. What I think you're going to get is this. You'll get more of a downdraft. That downdraft will have lighter volume, and you're going to be coming into the strength, and that's the strength, the bottom of that strength in the 10-year is 127.23. So it's about another point down from where we are. Okay? Now, that being said, let's go to the 30-year. The 30-year thus far got hit hard out here today. The difference is that the 30-year is down on 439,000 contracts, and that's coming into 578. So the 30-year, which has been the leader, by the way, is still saying, hey, the 30-year wants higher price. Now let's go to the TLT. So the TLT, folks, is the 20-year plus ETF structure. Now the TLT is in a confirmed ABC structure on the way up. It took out the B point, took it out with volume. The TLT is giving us the clearest indication that bonds still want to go higher, and this is what it is. It came down today, $2.36. It had 13 million shares traded. However, that 13 million, folks, is going into 18 million shares that were traded on January 6th. So that's not enough to break down the TLT. And, so it's certainly a heads up in the context of rates, because if you can get the rates right, oh boy, you can get a lot right. If we go over and take a look at the XLU, and I want to thank Z for giving us the heads up on this XLU. The XLU, folks, is a utility select spider, and this all has everything to do with interest rates, okay? It's been a great trade. The XLU has come down with volume. 31 million shares, they get out of that so fast, the door's not, you're down $2. That being said, however, the XLU was 31 million. It's going to 37 million. So we'll see how it hits the 45.50 area, because that's where it got the big juice, the 45.50 area. A lot of things happening. Because now if we go back, okay, now let's do King Dollar. We go into King Dollar. Then we're going to put this all together. We take a look at King Dollar. What King Dollar did out here today, up big. Does it have the juice behind the move? No. This is where this is going to get really interesting. So we've done 48,000 contracts in King Dollar. Huge movement, however, and it's still at the highs. That 48,000 contracts is not enough because we came off the high on Tuesday with 58,000 on the way down. That is how that is set up at this particular point. So inside that correlation, that's still saying that, guess what? King Dollar is still topping out. So volatility is going to be here, no doubt. What do you want to do? The intriguing part here is going to be this, is that most times that if you have bonds down, guess what? Market should be up, right? Opposite here. And that's what it's going to be. Is it going to be another divergence in the market, or in fact, our rates ready to pop and the market will do conniptions? You stay right there, man. Mr. Dave White's coming right back with us.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Check out the new look of Tiger TV. Now you can see all hosts, charts, and computer screens live in high definition. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Thinkorswim, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV. Now, crystal clear in high definition, 24 hours a day, 7 days a week. If you haven't seen the new look of Tiger TV, then visit TFNN.com. Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dave White, Tom O'Brien. Appreciate you growling and prowling with us out here. We had the Dow finished down 16, Nasdaq off 20, S&P's off, $1.50. And, of course, don't forget, every trading day, I'm Mr. Dave White. That was an outstanding show. 1 to 2 Eastern Standard Time, right here at 2 to 3. What is
2 to 3.
2 to 3. 1 to 2.
Right in front of you.
Yeah, exactly. How can I get it here? 2 to 3 Eastern Standard Time.
Andy Heck used to stalk me. Now you stalk me.
I know. I like it, man. I like it. So what are we looking at this week?
Well, I was going to say during the week in the den, I did something to you where I said,
all these penny stocks are moving topside.
right, and someone said something to me, and I emailed them back, and I said, yeah, it's a little scary, a little crashy, because most people think they see all these penny stocks move,
Right.
and they think, yeah, well, this market's going to the moon.
Right.
I just think the opposite, which is they're always the last to move.
Those are the biotechs. The biotechs last to fall apart.
Right.
You know, but they also go to the moon before it, which we know that they're already at the moon.
Right, but when you see 30-cent difference in a 60-cent stock,
Yes.
and they move, now there may be reason for it, but probably
It's a heads up.
It's a heads up that you need to worry about it when you start seeing these giant movements in these small stocks. Either one thing has happened. Either you're basically going into a big bubble and
they'll make money.
And
Yeah.
gambling is huge. But normally, after a huge run back up, isn't when these things start running for real. They're
Right.
like quiet for a while, and the market's kind of quiet, and then they take off, right?
And what, you know, it's wild, folks, and what that is, too. So picture something. What that is that you have people that are in the market, and they've made money, no doubt. Then they say, okay, what hasn't been hit? Then they go after that. Then you have other people that haven't been in the market say, okay, I missed this whole run. Where am I going to go? And they go in the penny stocks.
Yeah, they're shaking the keys over here. Look,
Right.
look.
No,
And
no,
they
I
get
know.
you to jump right in right
Oh,
before they pull the trap door on you. So if you are seeing penny stocks move, make sure and take your cash very quickly.
Yeah, no, there's no doubt. There's no doubt. No doubt.
Anyway, we got a lot of stuff to talk about this week, but boy, I tell you what, we've had earnings just about everywhere.
Yes.
And you get one good earnings, and you get what?
That
10, 5 that just get blown apart.
Well, there's no doubt. So check this out, folks. You have a phenomenon out here right now that the indices are still at highs. You had Disney gap up, look great, no doubt. Okay, Amazon gapped up, didn't look great, but
You
gapped
seem to
up.
get one a
Yeah,
day.
right.
And it comes up, and the other 7 are down 10,
But
$15.
You're talking exactly. You're talking major stocks going down $10, and it's heavy, folks. Okay, that is not a bull market phenomenon. It's a bear market phenomenon. You know, and it's just a matter of when it hits the actual index.
And, you know, some of these stocks were fairly predictable, but you couldn't even borrow short on them. Like
Right.
GoPro came out, and they pretty much got hammered down, and
you
people
know-
are going to buy them again anyway.
And what's wild about GoPro, folks, is that GPRO, price-wise, it wasn't that bad out here today, right? You know, yesterday it was at a price point of 54. Today it's at 47. Okay, I know that sounds bad, but what my point is, that's nothing compared to where it's going to go.
Well,
it is hammering. So check this out. We did out here 23 million shares today, hammering a swing point with 14 million. That's going to blow that baby away.
when that stock was at $90,
Right.
and you wanted to buy puts on it
Yeah.
at the money,
Okay.
it had to hit 60 before you made $1.
Wow.
So everybody already knew that the story on this was bogus.
And you know what you have, and this is how slick the the CEO is that he got to sell stock at the highs. His father did. His trust did.
Everybody and their dog.
Yeah.
And I think we brought this up before.
We did. No, we did when it happened, right?
No, which was a long time ago when I was listening to you, not on the show with you. We were talking about a stock that did something very similar, which was the donut company.
Oh, yeah.
KKD.
Krispy Kreme. Yeah.
They sold everybody in
Right.
it. Everybody, only a blind man would have missed the chart on that thing screaming, saying,
Right.
we're selling everything at the top
Do you remember
and retiring.
It was so cool because one of our listeners called, and remember I had a 10-minute conversation with him, and he was hell-bent on buying it. I don't think he ended up buying it afterwards, but it was one of those deals, folks, that was that bizarre.
Yeah.
You know what I mean? It was. And with GoPro, I think, what is the lockup's pretty soon. I mean,
No, it's already over.
oh, the lockup's already over.
It was the 23rd of December.
Oh, okay.
But you can see what happened.
It's a monster ABC down.
I mean, right after December, everybody started selling, and that was pretty much been it.
Now what you got, let's see. So your A point is 69. You get 45, 50 by 65, so you get $24. That's going to be a $24 stock.
Which is probably about where it should have gone out to begin with.
I think that's what it was supposed to do. Let me
Yeah,
just
I think
see.
that's what the original price was on it when it came out.
Yeah, it was. It was $24. So it's going back to the original price.
Which is not very different than almost all the IPOs this year. We went through them a couple weeks ago. They are all coming back to where they started from out there. They've all sold the old saying is sell the sizzle, not the steak.
Yeah.
And in this case, it was going to be a media company. It's not going to be a camera company. We're not going to have the margins that everybody else does.
Right.
And I hate for every one Facebook that figures out how to make money after they go public.
Yes.
There are 20 companies that never figure out how to make money after they go public. So there's always those.
They sit back.
They sell the sizzle, they get the IPO money, and they try to figure out how to make cash after. And I hate that as a model for investing in a company because you basically almost always get these results, things that don't have big barriers to entry. We went through one of the big IPOs that was just easy to see from the get-go, which was Groupon.
Yeah.
And I see now that Amazon makes more money in that space than Groupon does.
Wow.
And
that's pretty cool.
So there's, it's very tough. But if you look at the business plan of most of these, if it is based on betting on the future that they're going to figure out how to make money, not that they're making some money now, and if you give them more cash, they can open up more stores and make more money.
Right.
It's almost always, well, if we could get to the scale, we're going to make money. And those are the ones that scare the living daylights out of me because, like I said, 20 of those always fail to the one that, like Facebook, that did finally figure out how to make money on the upside.
Talk about making money, man. Okay, now, I was just listening to your program. You're looking at a $98. Right?
Yes.
Yeah.
Yeah. Oh, you mean on the dollar?
Yeah.
Oh, okay. Yeah, I tell you what, it came off, within a couple of minutes of the jobs number out there.
It did.
And it wasn't the jobs number. I think a lot of people are going to hear that tonight, and they're going to miss why we had such kind of an interesting day. And that was all the restatements of the months before.
Okay.
One went from like 325 to 400 or something. I think the December or the November one.
The amount of jobs that...
So they said, oh, suddenly it's all there. And, of course, the worst thing the market can think of right now is rates sticking up.
Yeah.
Even 100% would be too much because they're going to assume that even if it's 100%, it's going to be 100% the month after.
Once it starts.
Once it starts.
Yeah.
Doesn't matter if it jumps up 0.25%, they're going to...
Whatever it is. That's right.
They're going to pee their pants.
You stay right there. Dave and I are going to be coming back, folks. We're going to talk the dollar, then we're going to talk some technology. Dow Industrials finished down 16, Nasdaq off 20, S&P's off 2, gold down $27, silver off 50 cents, bonds, the 10-year down 1.111 ticks, 31.17, and King Dollar up 1,000 ticks. We're going to be right back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All of them are running for the hills.
Welcome back, folks. Dave White, Tom O'Brien. Appreciate you growling and prowling with us out here. Dow finished down 60, NASDAQ off 20, S&Ps are off $1.50, and we're looking at SpaceX once again.
Yep, we talked about it a few weeks ago. I think about 4 weeks ago. They're basically trying to figure out, and then I'll get into why it's important.
Yes.
They're trying to figure out how to land the main part of the spaceship back on a barge in the middle of the ocean.
Okay.
And the reason why is so they can reuse it. Of course,
Because that's where the money is, right?
it's about $10,000 a pound to put something in low Earth orbit.
Okay.
So if you've got 200 pounds, you can figure out how much it's going to cost to put it up there.
Right.
Now, all these companies are looking at the mother lode of putting satellites up with both Virgin and Google and Facebook, all wanting to put up a constellation of 400 or 500 satellites at very low Earth orbits. So you'll always have one. You were talking about it in the previous hour, everything going wireless, right?
Yeah.
Well, there's vast areas of the world that no one has any internet coverage on, right? So these satellites would constantly be passing over you, and you'd be handing off one to another, just like cell phones do, right? So
You're going to need traffic stops up there.
well, that's
that'll be the next thing. 10 years from now, we'll be talking about that.
It's a problem with space junk flying around up there.
So it's a 22-story tall Falcon 9 rocket that's going to lift off. Okay.
Right. Now, the last time it actually hit in the center but ran out of hydraulic fluid about 10 seconds before it fell down, and then it blew up.
It was that close.
It was that close.
Oh,
so
my God.
Now, they've got 8 more or 9 more launches this year, so they're going to get 8 or more 9 times. But if they can get this right, and Virgin has their own idea where they're going to use a spaceship to get it up to about 60,000 feet and then shoot the rocket off from there. But both of these companies are really working hard to figure out to bring the cost from $10,000 a pound down to maybe $2,000 or $1,500 a pound. And both of these, if they can reuse the rocket and only have to pay for the fuel, then basically it's going to be a game changer in the fact that it's going to be a fourth or a fifth of the cost that it has been to put stuff in space.
Cool. Yeah, right.
That's one of the reasons why I heard you talking about Putin. They were kind of jerking us around on putting stuff up and maybe getting our guys back from the International Space Station.
Yeah.
And we're building all our own rockets. But these rockets are all the prototypes for bigger and bigger rockets over the next 5 years when we go back to the moon in 2021, I think, is when we're supposed to do that. So, we're going to have more space stuff going on, but it's almost all about putting up putting up small satellites, and these satellites are going to be about 200 pounds compared to about the 2,000 pounds or 2,500 pound satellites that are up there now. And so much smaller satellites, much more of them, but this means that you could be much more likely in the future to be anywhere on the globe, be able to get internet coverage.
It's getting faster and faster. Hey, I want to swap gears on you for a second. Net neutrality. Can we talk about this for a second?
We certainly can. It is one of our slides coming up
because
here.
And Dave has educated us on this, but every time this comes up, I still get really a little bit confused here about what it's all about. Okay, so this week it came out that now the FCC is going to basically go along with the White House and say, okay.
Well, hold on.
Okay.
There's a little bit. Now, sometimes you just come out and announce something and see whether anybody objects to it.
That's right. It flies, right.
Right. So what happened was the FCC President Wheeler put a kind of an op-ed in Wired magazine.
Okay.
And the deal was to try to get the discussion around his talking points and everybody argue about that. There's a technique.
This is just recently, not the last.
This is Wednesday.
This is exactly right. That's what I'm talking about.
There's an old argument that says that if you're negotiating with somebody and you say, I'll give you $10 for it, and they say, I want $20 for it, you go, okay, we'll split the difference. I'll give you $13 for it.
Yeah.
Well, the first thing everybody starts doing is saying $13 isn't half the price. And you go, so you'll take 15? And the people say yes. And they forget the part where they just went from $20
Right.
to 13. You cut it in half.
Sure.
And if they say anything, you say, well, a log doesn't split even,
That's right, right.
So it's a negotiation technique. This is exactly what I think they've done, which is come out, say all these things. He's not the only one. There's five other more people that have to vote on it the 26th of February.
But what is net neutrality mean?
It means that no matter, basically data is put into packages.
Right.
And each package goes across the internet as a single package.
Right.
Now in that, it says what's in this, like a word processing file or video
Or streams like us. Right.
Or streams like
Right.
us. And what has been a favorite of Comcast and Time Warner is to screw with anybody that they think they can get a dime out of.
Okay.
Right? And it's kind of the old protection racket where you stand in front of the store and go, yeah, it'd be real tough
That's right.
if
So-
someone threw a rock through your window. It'd be bad.
Because what would end up happening, like in our case, what would end up happening, the streaming
They'd slow it down.
content, they slow it down.
And
and just so you can get an idea, folks, of the price structure, how the price structure has changed in the years that we've been in this business. So check this out. When Broadcast.com went public, we were actually in the prospectus. It was us, Microsoft, and Intel, which is a total mind blow, but we were in there. You know. And one of the main reasons we were probably in it is that we were one of the largest streamers then, and people get their mind blown because there's only 342 people that were listening, okay? But we were paying, I was paying then, right, $5,500 a month for that stream.
Right.
So now check this out. Now, of course, we're maybe whether it's 8,000 times bigger or whatever that is, right? Now, it's still expensive, but we're up to...
Fourth, maybe that.
No. Huh? With all of it, we're maybe 3,200 or something.
Yeah.
You know what I mean? But that's a whole different. The difference then. I mean, now you get low balance. It wouldn't matter whether 20,000 people come on at the same time.
Right.
Okay. So is net neutrality? Is that saying that at some point that they could turn around and say, okay, we want to start charging you, O'Brien and TFNN, for streaming?
It would not. According to what Wheeler wants,
Right.
and what he said, is that it doesn't matter what you have. Data is data is data.
Right.
You cannot.
Which would be good. That's what we want, right?
It's yes.
Okay. That's what I'm trying to get my head wrapped around.
Well, it's not that only, though. What he's opening the door to is charging you for more data. And, of course, if we're sending somebody an hour-long video podcast,
Right.
and you've got a big file,
Right.
he's kind of opening the door that you could charge people more for the total size than what is in the content. But you can basically say that I'll guarantee you that a big movie is going to be 500 megabytes of data, and a word processing file is going to be 1.
So who's lined up? How is this lined up politically?
There are a couple of people that are Republicans on the FCC board. There are 3 people that are, including the FCC chairman, that were appointed by Obama.
Yeah.
So you've got all these guys. They all get to vote on, and it will come out on February 26th. They'll get together and they'll put it all together.
So that politics, I get that politics. Politics-wise, though, is corporations, and this is where it gets fuzzy to me.
You have Google and Netflix.
Yeah.
Leading the charge of saying that all data should be neutral.
Okay.
Microsoft's kind of on the fence.
Okay.
Apple hasn't really taken a position at all.
Okay.
If they are, it's in the background.
Is it the Comcast of the world that want...
They're the most vicious of it because they want to make sure that they can charge anybody for anything.
So we know we want to be against it, folks. That's the bottom line. No, seriously.
No. You want to be... Comcast is against net neutrality. You want to be for net neutrality.
Exactly. That's my point. That's what I was trying to get clear in my own head. Do you know what I mean? That, okay, if it's the cable companies that want to squeeze this more, we know what the deal is, okay? Because what they have the biggest gate in the world. Think about this. The Internet's the biggest thing in the world.
It is.
And they could be the ultimate gatekeeper.
I have compared it to the water rights fights in California when everybody just went in, and if you've ever seen Chinatown, it was all about Mulholland, and that guy was actually a real guy,
right?
And he built a dam, and he built it cheap, and it ended up killing 6,000 people when it busted.
Wow!
And so when they picked him out of the movie, it wasn't just because he was kind of a little bit.
Right.
He basically wiped out probably 4,000 or 5,000 farmers out there just by cutting all the water off and sending it all to L.A.
Right.
And So that's exactly,
thing. Yeah, no,
it's
I can see
exactly
that.
what people
Right.
are worried about, that, well, maybe your data is just not going to do it. Now, the way that they've done it to this point is that between Comcast and Verizon and Sprint, there is a thing that's about the size of a refrigerator sitting in an office somewhere. And when it goes from one network to the next, it has to go through this refrigerator. So, like many movie scripts, when they don't quite get the money that they want from somebody else, somehow that lever just gets pulled,
Right.
and maybe it doesn't work as well as it should.
Right.
In fact, we had a problem last year at TFNN where there was problems with some of the video not getting to some areas of the country, and it was just that. It was a fight between two carriers. They just go in there and start pulling cables out when they want to. That would be illegal.
That's good. We got it. That's good. That's what we want. So net neutrality, folks, we want
We're
it.
for it.
Dave White, Tom O'Brien, we want to hear from you. 877-927-6648. Stay right there, folks. Come right back. I got it.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Each and every time that the dollar ticks higher, S&P wants higher price. Each and every time that the dollar's ticking lower, guess what? S&P wants lower price. Dollar, the metals, and the S&P are going tick for tick.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Tom O'Brien.
Welcome back, folks. Dave White, Tom O'Brien. Appreciate you growling and prowling with us out here. Don't forget, folks, Dave has a couple great newsletters, the way you can test drive them. Come over to our website at TFNN. Going to go to newsletters. You can go to trading newsletters. You see the path of least resistance right there. Test drive it. 30 days, absolutely free. If you'd like to a longer-term newsletter, hit investment newsletters, and you'll see the Tech Insider right there. Nice long-term newsletter. Right now, we're looking at Amazon versus Netflix.
Yes, and the most interesting thing between these companies this week was data coming out on how much video that Netflix and Amazon are doing. And Amazon is beating Netflix now in downloading movies or streaming movies.
That's bizarre.
And that's Netflix big business, right?
No, that is their business.
And here is, they basically did some huge surveys on why.
Okay.
And it looks pretty much as if that customers, especially lower-end customers, like to pay once instead of seeing the bill every month.
Okay.
And when the people have been asked in the surveys, that basically comes down to it. They pay that Amazon Prime thing for 1 year,
right,
and they feel like they're getting a value compared to paying $8 a month for Netflix every month.
Well, and what also happens, though,
you get Netflix, Prime, free shipping, and all the other,
which is huge.
Now, I've got Amazon, and the one thing Prime, I bought it right after Christmas.
Sure.
I just did the trial, and I said, okay, it's worth
it. Right.
The problem is trying to get any of the movies really to play very well. Now, they've had a big box that was like $100, like the Roku boxes or a regular cable box on your TV. The big thing that's happening on the 12th is they're going to come out with a little dongle-like thing that just plugs directly into your TV, like the Chromecast.
Yeah.
And I've loved the Chromecast, especially that I can use my tablet that I really don't use for anything else more as the remote for it.
Okay.
And you can flip everything around. Now, Amazon's going to have the kind of the same thing, but it's also going to come home with a little remote so that if you don't have a tablet, you can use it. It's going to be about $40. It's going to be for sale the 12th of February.
So let me just get this straight. So it's like basically a thumb drive, right?
Yes, it's a thumb drive, but it plugs into the HDMI port on your TV, just like a Blu-ray DVD player.
But when you put that in there, immediately you can go onto Amazon and get any movie you want. That's pretty intense.
You can buy that and get it in your TV. I dislike that because this new device from Amazon is like a small computer.
Right.
It has 2 gigabytes of memory. It has all kinds of stuff.
Yeah.
Televisions are made for the lowest common denominator, and as we go by, more memory, higher resolution, a lot of that kind of stuff is going to be interesting. And I like just being able to take that $30 thing out, plug in the new one, and have a brand new TV that has all the new features instead of having them all built into the television forever.
I'm with you.
Okay.
So now, then we have own a Chromecast. Google wants to give you one for $6. Same deal.
To kind of give a little fist in the nose of Amazon during this week when they come out with their Chromecast-like device.
Right.
Google is going to let you buy their Chromecast for $6, which is normally $30. So if you are thinking about buying these things and a Chromecast, I'm going to end up with both of them.
Now, these are, I happen to have a bunch of TVs in the house, but they're all new ones, so I don't need those, right? So if you're buying a new one, you don't need them, basically, right? Because they're smart TVs.
I didn't buy a smart TV.
Right,
I bought a dumb TV
I'm with you, right.
with a lot of inputs, so I can just plug these things in as they come along.
Because there's new TVs that aren't smart TVs, right? I get it. Yeah,
so you can save a lot of money, and as things go along, like the Chromecast has only 1 gigabyte of memory in it, so it can't buffer as much.
Right.
So basically Amazon's going, well, we've got 2 gigabytes of memory, right? And that war is going to go on, new features, additional things.
No. And I can tell you, folks, if you're looking for a TV, right, I bought a couple of different ones, right? But there's the Vizio.
Yeah.
That's a 60-inch for $495. That is unbelievable. It's like dynamite. And I matched it up. I get a plasma. I matched it up against the plasma. And no, it's not a plasma. But guess what? It's dynamite. It's like unbelievable.
What do you think of Netflix's future, though, if they can't be the #1 streamer, but they are the company that's what they're known for?
I think I can tell you personally, what I haven't done yet is this. I've watched a few movies on Amazon, but I always hit Netflix.
Yeah.
So this is just a social thing now, me getting used to going over to Amazon, even though I have it. Is that interesting? Do you know what I mean? Now, the kids do. The kids go over to Amazon, and that's what's really important, really, also, because they're going to be their business. Do you know what I mean?
Right. Now, on the Chromecast, I have like Crackle and a bunch of other quote channels that will run through the Chromecast.
Okay.
It's unclear how many you'll be able to put through the Amazon, although there are a couple that they talked about. But things like ESPN in the future, as everybody goes to a la carte, we're probably your choice of what you can plug into that TV is going to be important because it's going to be what is easy. Now, one of the nice things about these dongles is once you get them started, it is your Wi-Fi connection from your broadband in your house.
Yes.
Goes right to your TV. It doesn't have to go from there to a box, then to the TV, right? So if you've got a kid over playing games somewhere else, as long as you're not using too much bandwidth, everybody should just be happy in the house, right?
Yeah, right.
One person isn't going to suck up all the bandwidth out there. So it is kind of interesting.
Apple brain drain.
Yes, what we found out from Tesla this week is that they've hired 150 people from Apple.
Wow.
Now, a car company hiring all these people basically means that they're going to be doing a whole great deal with electronics in the car.
Yep.
But my question is, how much are those people going to cost a car company? That's pretty expensive talent, right?
You know what's wild about this? Do you remember one of our shows a couple of years ago, you were talking about Steve Jobs, how he used to brain drain everyone else.
Yes. He'd go
right?
around.
I mean, he was always hiring everyone else's smartest people, right?
Right, but then they got into the big brouhaha about not hiring anybody.
Right.
They basically said, hands off.
That was after he got all the people he wanted, probably, right?
Yeah. So anyway, Tesla, we now know, has 6,000 employees. 150 of them are former Apple people. So he really is trying to channel Steve Jobs and the Apple culture in his company. I'm just always interested in whether or not a company, when it is competing against a world of other manufacturers, will be able to keep kind of margins that the rest of the world doesn't have. It would be rare to see a car company building cars that had engines where someone was making 25% margins and one guy was making 5%.
I mean, remember a couple weeks ago we were saying that, or I was saying, is that,
you'll buy any car you want.
No, not only the car, but what I'm saying is that he very well he has this car out here, but he really may be in the battery business and changing. He's still using a lot of money, folks, okay? And if he went out for the money to say, I want to be in the battery business, people wouldn't give it to him. But this is fancy. You know what I'm saying? And if he gets it right, guess what? Then he puts the utilities out of business. Now you're talking money.
We're going to see you next week now.
Is this the end of the program?
It's a show.
Oh, what a bummer.
It's over.
Thanks, man. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. And whatever you want in life, folks, visualize it, step in or take ownership and fly with it. Thanks for being here. Have a great weekend, safe weekend. Thanks, Dave. Cooking, folks. Have a great one.
following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Sam in Irvine, California. Hey, Sam, what's going on?
Hi, Tom. How are you?
I'm doing great. You having a good day out there?
I'm having a great day. Thank you very much. I want to preface by saying that I'm so grateful to you and TFNN for you to assemble such a great people, such a team to help the small investors like myself.
Well, we appreciate you growling and prowling out here with us, Sam. Thank you so much.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. It's a TGIF, folks. Let's make it a great one. This quote's by Vincent Barnett. Almost everything is more complicated than it seems, but almost nothing is hopeless. Market-wise, let's take a look at it out here. We have the Dow Industrials down 77, NASDAQ off 18, S&P's down 3.5, gold contract down $27.20, trading at $1,235 an ounce. Silver off 47 cents at $16.72 an ounce. Platinum down 31 at $1,222 an ounce. Copper flat at $2.58 a pound. Light sweet crude up $1.30, trading out at $51.77 a barrel. Bonds, we have the 10-year down 1 point and 6 ticks at 128.21. The 30-year off 1 point and 5 ticks at 147.23. We're going to be bisecting and dissecting the whole market, particularly those bonds. King dollar up a full point and 83 ticks at 94.81. The yen up 151 at 119, and the euro down 156, trading out at 113.21. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world? In the world of the S&Ps, let's take a look at them. What do we have out here? So check it out. We take a look at this S&P, and what you're going to see here, where is she? Okay. What you're going to see here, folks, is not only fast movement. Each and every time that the market struggles up at these highs, basically the market gets hit. It gets hit pretty quick. If we first just go over to the future market, we take a look at the futures. What you're going to have inside the futures is this. The futures this morning got up to 2068. Great job number come in. Bottom line, what we had out here yesterday. Yesterday you had that price spread from the 2020 level to the 2058 level. Today you get to 2068. Gives it up. Now what you're going to have a failure on daily and on the weekly. I suspect, bottom line is that we're going to have some selling coming into this close out here. Just as I was getting on the air, basically the selling started. And what you're going to see is that each and every one of these trust on the way down, folks, just seems to come out of nowhere. This morning, when you were making highs out here, just if you want to see how anemic it is, and I said in the den, these big operators just got to be so happy that the public is just buying all this stock and other funds are buying it. But who's ever selling it's got to be elated because they keep it up at the highs, they keep feeding it to them, and then they hit this thing and they hit it hard. So we made a high out here this morning with 14,000 contracts in the S&P, and then we come off the high with 57,000 contracts, with 52,000 contracts, and then someone just hit it again with 56,000 contracts. Bottom line is that you're at 2050 right now, and as soon as it got into 2051, you're going to see this coming into the close. This wants to run down to 2043 right now. The 2043 number was from 940 yesterday morning, but that's how this little baby is set up at this particular point. If we go up and we take a look at just the correlation inside the SPY, what you're going to see with the SPY is this. SPY got to a price point of 207.24 today. You're at 205.40. It's going to be a failure on the daily, on the weekly, all of the above with lighter volume. The NDX 100, if we take a look at the 3Qs, what you have with the 3Qs, same type of setup. The 3Qs also got to a higher high, gave it up on volume, on the daily, on the weekly. And these fast moves on the way down, folks, and the market being this deviant that, you can get moves up fast, furious, and then out of nowhere it comes back down again. What we had out here today, intraday, when the first move down, it was saying that the S&P will basically downgrading Greece. Well, everyone knows that, okay? Bottom line, this is what's so crazy about it. It doesn't matter. It always seems that when these come out, you're always going to get like some event and then they sell into it. Some event, they sell into it. Bottom line is that, yeah, there's selling going on in an extraordinary way. Now, gold contract. Let's go to gold. They smoked gold out here today. We got gold. We hit a low out here of 12.28. We are at 12.35 right now. You do have lighter volume, however. We are at 185,000 contracts going into 234,000. The low of that where we broke topside from was 12.27. In that context, you're still okay in physical gold. You look at the GLD, same setup. You can see it pretty clear in the GLD. The GLD is down on 10 million shares. You're going into the breakout area with 17 million. That being said, now this is this is the first day that I've actually, when I'm looking at this, saying, is there a chance that bonds have topped out? Okay, so I'm going to take my time with this because this is going to be interesting, folks, because if this is a top out, there's going to be a lot of ramifications to this. Because it would be like, okay, so is the texture going to change again? Because normally what you have is this. If the market's going down, as I think it is, people freak and they go into bonds immediately. So in that context, like, okay, if bonds are going down, what's the problem? What very well could be the problem here is that bonds are going down, and if the market really thinks that interest rates are going up, the market will really, basically sell off. So what we have here first is this, the 10-year bond. 10-year bond today, we're down on 1.6 million contracts, which is big. You're breaking a swing point with 1.6 million. So in that context right there, it's like, okay, you're coming into a much higher volume spike at the 129.18. If we go over to the TLT, just because we're really, and you're going to hear this as I'm on right now, because this all is happening right now, okay? That's what's going on. So the TLT is down at 9.8 million shares. The TLT is reacting that no, it's not the end of the bond market. It wants to go much higher. Because why? Because the TLT is already in an ABC structure on the way up, and the TLT is coming into 18 million. So that's half the volume. Now let's go to the 30-year. We take a look at the 30-year. What we have with the 30-year is that right now we're at 422,000, and you're coming into 500. We're coming into, 576. So what happens so at this point, that's still saying bonds can go higher. The reason that we were going to watch this real closely is, I'm going to go back to the 10-year again for a second, because this 10-year, the way the 10-year is trading, is that, okay, that's going to be a deep retracement, the 10-year, because it's still light of volume, but that expansion is pretty intense. We're at 1.7 going against 1.7. You get another day like that, that would set up that, okay, that would also be volume off the high, which would be really dangerous. So at this particular point, okay, what you have is this. The 10-year is still questionable. The TLT, which is the 20-plus, wants to go up to the top, wants to go higher. The 30-year still hasn't broken down. And within the next couple days, you're going to get a feeling on this. Now, what do you want to put that together with? I'd put it together with the buck, with the dollar, okay? Because the bottom line is that if rates do go up, you're going to see this dollar go to the moon. And we have a problem with gold, too. That's going to be a problem. Okay. So when we look at the dollar, this is what you have. We're at 46,000 contracts. That's not enough. The dollar right now should be banging out about 60,000 contracts. So the dollar is, we're basically, we went down on 58,000 contracts 4 days ago, Monday, today up and 46. It's like, okay, that is not saying the dollar is going to go a lot higher either. So what does it mean? Well, what it means, folks, is that Monday, Tuesday, Wednesday, get your ear glued to this bond market, because it's going to be really intriguing if that's the case. Right now, I would say that no, it hasn't topped out, but let me tell you something. It's got my attention big time. Our phone number is 877-927-6648. Some of the high-volume stocks in this market right out here today in a low-volume market. You get Twitter up $6.50. Pandora's down $3.51. Yelp, man, Yelp needs some help. They're getting killed. Yelp's down $12. You get GoPro off $6. Some of the Dow stocks out here, what we have, Boeing is down 63 cents. You get American Express, that's up 25. Oxy's down 21. Our phone number is 877-927-6648. Give us a call, folks. We want to know what's going on in your world. Dow Industrial's down 76 right now. Nasdaq's off 21. S&Ps are off 450. We're going to be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foresight Fund Services, LLC.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. Tom takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow Industrials right now down 106. You got NASDAQ off 30. S&Ps are off 7.5. And they're going to crack this S&P coming into the close out here today, folks. And what's very unusual, just so you can really understand the type of market that we're in, meaning a bear market, what you have, folks, surprises come to the downside. But I can tell you that when you've had a week like we've had, meaning that the expansion has been topside all week long, it's very unusual when you close on a negative note on a Friday. In fact, it's very hard to do. But bottom line, that's unless things change in the next 40 minutes, that's exactly what you're going to have. Let's go to Jim in Minneapolis. Hey, Jim, what's going on?
Hey, Tom, how you doing?
I'm doing great, man. You staying warm?
You know, we are. We've hardly had any snow this year, and it's all gone south and out to Boston. And
it has.
I mean, it's just that last year we had, Snowmageddon and polar vortex and everything, all the vernaculars. But yeah, it's just been
cool.
It's been. I'll take it. But,
totally, man.
Question for you on the looking at the sell-off in the bonds.
Yeah.
But the REITs, IYR. What do you make? What's your thoughts there?
Let's take a look at this. This is interesting, folks. Okay, so the IYR are all the large shopping centers. Okay, the low in this for the year is a 65. The high is 83. And when we look inside this, okay, Simon Property is 7% of it. American Tower, well, that's the cell towers and all that. Then you have Public Storage. You have Equity Residential, but basically that's big apartments. Crown Castle that's in Hawaii. That's the Pineapples. Then you have a healthcare REIT, Avalon, Prologix, Ventus, and Boston Properties. This little baby's coming down on volume. You got what we had with this is that you got the warning shot that came across on Monday. We went down Monday with volume. This thing hit from 81 to 79. We did big volume there. Now what it's doing is it's stopping right before that today. If we put this on a weekly, and we take a look at a weekly, let's put this on a weekly. Okay, so what's setting up here on a weekly, we're at 79, and 74 is your next stop. And if this comes down with volume, this could be big problems for this REIT.
Yeah, you look at a lot of the REITs out there. I mean, they're like you said, they're banging on them hard with volume today.
Well, watch how this works, folks. Okay, one of the, so picture something, and I know this technically, but I know this fundamentally too. What I was trying to figure out that now we're in the single family business, folks, the fund, okay? And this is really the commercial business. Well, it is the commercial business, right? And as we got through the downdraft and the depression, I was trying to figure out, okay, how are these, and I think a lot of people are trying to figure out, how can these big players stay in business? Well, what happened, folks, is that because the interest rates went down so dramatically, that helped them beyond belief, man. I mean, they made money hand over fist just refinancing their debt. So that's what you had happen here, right? Now, that's one portion of it. Watch the other portion. The other portion is really intriguing. Every corner of the United States that you see, folks, that when you see commercial buildings going up, fundamentally the way that it works is this, is that you have an assembler that find the land, then you have the buildings, then you have someone that is basically putting the plan together, getting it through, the cities, the states, and all of this, right? In that concept, what happens is that they're selling a cap rate. And when I was looking at, when you called Jim, right, I looked over, I says, ooh, this is interesting, man. This is getting hit, right? And so what would happen here on a fundamental basis is this, is that the cap rate itself, there's many of these that were probably already into deals that have pushed a cap rate out there. And one of the reasons commercial developers have made so much money for so many years, folks, is that picture something. You sell something at a cap rate, and you're selling this, by the way, 7-8 months before anything's done. If the cap rate gets better, meaning your rates go down, you make more money. Guess what? On the other side of that, if the rates go up, you're toast. And they're talking about a very small amount of money, a small amount of percentage move. So it's something we want to keep our eye on, man. You know.
Yeah. Well, the thing here in Minneapolis, I've seen, and what I've kind of canary in the coal mine of, tremendous amount of big commercial properties that the strategic guys are buying out of, in the bottom of the market. They're unloading left and right. I mean, big transactions. And then PIMCO bought a building in town here, a couple towers.
Sure.
Because these guys, obviously, with interest rates where they're at, they're using them as bond replacements, to get the cash flows for pension funds, CalPERS.
Right. And when we just talked about those issues, we didn't even talk about malls that basically are toast. That they're done. The B malls out here, folks. B strip joints, not strip joints. I love it. B strip joints. B strip malls, okay, and B big malls are done. Okay, people only want those, big fancy malls, and that's it. So it's gonna be wild watching this thing shake out, man.
Cooking. All right, have a great weekend, Tom.
Hey, when are you coming to Florida?
Middle of March, I'll be down there for a couple of weeks, and then back again probably in May. So
there you go, man.
I'll look you up. All right,
Cooking,
brother.
man. Have a great one, man. Have a safe one. Market-wise out here, so let's go take a look at those futures out here, folks. What you have with the future market is this. More than likely, excuse me, it wants to get into the, put this on a 10-minute. What it looks like this baby wants to do is get into where we went topside yesterday, and that's, is it the 2054? No, it's a 2038 mark. That's where this is. 2043 mark. We're almost there. We're at 20. Right now we're at 2049. Yeah. So what you can expect is that as we start coming into this close, you're gonna see a little more selling out here. And as I said a little bit earlier, what you will see is that this is going to be a very large rejection of higher price. You're going to have lighter volume right across all the indices. And when you actually take a look at the setup, it's pretty wild that we've actually stayed at the same place, and we have been at the same place now, meaning this 2050 area. The first time that we hit 2050 out here, folks, was all the way back at, let me put the SPX up for a second. So we're at 2055. This is pretty sick. Yeah, we're going, you're talking all the way back to November 18th. That's where we're at. And what you do have now is this. You would have basically a couple lower highs, and you get flatness down the other side. What is with instant game is this 1972 area. That's the way this baby is set up right now. 877-927-6648. Give us a call, folks. Want to know what's going on in your world. Dow Industrials are down 109. Nasdaq's off 31. S&Ps are off 9. We're going to be right back.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated folic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how EverBank can help keep your money thriving just the way you want. Is growing your money a priority? EverBank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? EverBank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. EverBank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. EverBank is a member FDIC and equal housing lender.
Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow Industrials right now down 86. You get the NASDAQ off 26. S&Ps are off 10. And what you're going to see out here, folks, as we're coming into this close, you'll see a bit more selling into the marketplace. If we go take a look at the SPY, just in the correlation on a daily, what you're going to be looking at. Okay, so on a daily, what we've done thus far is this. You got to a price point out here of 207.24. Right now, we're 205.31. It had gotten over the last two swing points of this consolidation that we've been in. And as it got over it was dramatically lighter volume. Now what you have on the daily and on the weekly is that you got over the 206.26. You're going to close underneath it. On the daily basis, you're going to do about 110 million versus 174 at that level. That's on the daily. On the weekly basis, you're going to see what you have is that on the weekly basis, what you're going to have is this, is that we've done 615 million, and check this out, this is pretty intense, versus 941. So if I put this up on a weekly, what you're going to see, that's about as anemic as you can get. It's pretty intense. The week that we're talking about, folks, is this. And you're also talking about a give up on price. So you get a close under 205.48. What you have is that it couldn't even hold 4 weeks ago high. The volume characteristic there was 940 million, and we did 615 million thus far, so it means we'll do about 650. Now, what I'm not doing, so that's one of the most conservative ways of doing it. What I'm not doing is going into the largest volume day. And the largest volume day, folks, and this is what the kicker is 755. That is the high. With 755, it's sold off the high with volume. Bottom line, this little baby wants lower price. And you can expect the volatility in the market, folks, to continue. This is going to be a highly volatile market on a continual basis. And what I do expect you will see is this, though. When all said and done this week, what you are going to have is that you're going to have an aspect that it couldn't make the swing point. If you have my book, The Art of Time in the Trade, you know that that's where markets talk, walk, and squawk. That's the bottom line. Now, what we also have is this. So for the bulls and the bears, this is the ultimate fight, meaning the bulls and the bears. Because what we also have is this, when we take a look at the SPY. You have each and every time that we've come down to the lows that have been generated out there. Let me put this on a daily. You can see it kind of cleaner. Okay, each and every time we come down to these lows that started in December, you have an expansion of volume, but it hasn't been able to break the December low, which is 205.55. You know, the first time we came down there was December 16th. The second time we came down there was January 6th. Still an expansion of volume. Third time was on Monday. Monday we came down, and when you did come down there, we got lighter volume. Monday we had 163 million, was going against 192, was going against the big jobber of 259. So that's saying that you have lighter volume, it's building cause. It's not heavier on the way down. It is heavier, however, and this is how you set this up. Now you look at the top of the range. So the top of the range, the first time we were up the week, January 9th, you did 158 million. Second time you go to test it, you did 174 million. Guess what today, folks? Today is going to be 115 million at the most. See that correlation? That correlation's intense. So you take the correlation at the top of the market. How are you hitting the top? Is there more force to the top? And/or is there more force to the bottom? Bottom line is more force to the bottom. It's going to be a matter of building more cause, coming down to these levels, and keeping your eye on how you come into those lower levels. Now, if we go over to the IBB, there's something that's interesting inside the IBB today, and this is what it is. The IBB is just set up an ABC structure on the way down. What it's done is you came off the highs with volume. This is the biotech index. It came off the highs with volume. Came down hard, came down with 3 million shares, and then came down with 3.1 million shares. Got to a price point of 305.01. Then you bounced, and oh man, you talk about anemic volume. We bounced on Thursday with 940,000 shares. Guess what, folks? You got to a higher high today with 794 million. Gave it up on price. That's your structure, your A to B equals C to D. It's an ABC structure on the way down, more than likely. We'll see how it goes after the B point. That being said, it wants to go after the high volume swing low at 292. Your price projection here is about 298. So what I expect you're going to see here is that is going to basically go after the B point. So your next clue would be, how do you go after the B point? Does it take the B point out with volume or not volume? That B point, when we're talking about the IBB, the B point's at 305.01. So there's a lot of action out here, but there's also a lot of clues as to, will we break the swing point on the way down? Will we hold once again? because you have yourself quite a range here. This range is no doubt a really large range. That's what it comes down to. Z brought up the XLU. This is definitely coming off the highs with some monster volume. This is the XLU, folks, is the utility ETF, utility select ETF. That's down with 25 million shares right now. What is intriguing, though, this is all about bonds. What is intriguing is that it's coming into the November 6th level, and that November 6th level had 37 million shares. So it's nasty. There's no doubt about that. This is a nasty move down, but you're still coming down as to what it's going into with lighter volume. So how do you trade that? How do you handle that? What I would look for is this. When something gets hit hard like this, and it's still lighter volume, that means that if you get a follow through with heavy volume, that's it. That would be saying that rates are definitely going up. If this is like the gold market or like S&Ps or anything else, what I expect it is, what you'll see, it could get underneath this, volume dries up a bit, but then what you'd have to do is you have to build cause for higher price. This is where the whole building cause aspect comes in. Markets, whether they're going up or down, folks, the building cause, you want to wrap your head around it because it's a big deal. At the beginning of building cause, it's very tough to figure out, is it building cause or not? It's not tough to figure out inside a consolidation when you take the top of the consolidation and you take the bottom of the consolidation. As in the S&P, you can see quite clearly that each and every time you go up, your volume is fading. Each and every time you go down, your volume is expanding. That's building cause for the way down. So we'll see exactly how this comes down to the bottom of that consolidation once again. Does the volume expand as it comes down? Does it contract when it comes down? What exactly does it do? Inside the Dow Industrials today, bringing the Dow down, you have Intel. That's the leader bringing it down. Visa is next, though. Visa's getting whacked. Visa's down 529. You get Nike off 161. You get Procter & Gamble down 140. Let's go back and look at Visa for a second and see what's up with Visa. That's no big deal. So $5 for Visa is no big deal, no doubt. So that's bringing it down, putting some juice into the S&P. The Dow today is Verizon's up $1.42. J.P. Morgan Chase is up $1.15. You have Goldman up $2.28, and Ma Bell is up 28 cents. Let's go over and take a look at Verizon. Okay, so Verizon is coming into it had gap down with 40 million shares. She's going back up into that gap with 35 million. What Verizon did out here today is that they sold some of their cable lines. And by the way, the heads up on Verizon, what they were doing out here today, when I was working out with Nico this morning, I says, this is really interesting because Verizon, folks, I really respect Verizon. In fact, I own it. I've owned it forever because my mother gave me this. She worked for AT&T. I've had these certificates forever. But that being said, what Verizon, the deal with Verizon, them turning around, selling the actual lines, and they have dynamite Fios cable lines, folks, okay? That's saying that everything, we're going wireless. Wireless is the name of the game, folks. And that what it looks like to me that they're making a bet on it, too. That's what that really is coming down to. They're saying, hey, guess what? We're going wireless because if they sold all of Tampa, St. Pete, and Clearwater. We just went from, it's going to go from Fios to Frontier. But that is said, and that totally makes sense, by the way. It totally makes sense that we have zero wires anywhere, and everything's wireless, and we're on what? We're on our cell phones. Our cell phones are our computers. Because as I say many times, you want to listen to us 24 hours a day? It's TFNN.mobi right on your computer. That gives you the audio stream. If you want to get the Tiger TV, go to TFNN.com, hit the TV on the right-hand side. Guess what? And each and every year, of course, all of this stuff gets much faster. This is Tom O'Brien. This is TFNN. You stay right there, folks. We'll be coming right back. Dow Industrials right now are down 109. Nasdaq's off 33. S&Ps are off 9.5. We're going to be right back.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
We want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Tom O'Brien.
Welcome back, folks. You get the Dow down 87, Nasdaq's off 27, S&Ps are off 7.5. Let's go to Jay in Boston. Hey, Jay, what's going on?
Yeah, hey there, Tom. ANV. Look, you think there's a good entry point here on this one?
No, don't touch it.
Really?
Let's take a look at it, and I'm going to show you something here, folks. And this is crazy, and this happens in the gold business. Okay, so you get ANV. ANV, folks, is Allied Nevada. And bottom line is that we own this for a while. We made a fortune on it because what happened is that this was an equity that got spun off of Vista. And when it got spun off, we got it for nothing. The thing, ran up to $40. Bottom line, now you're trading at 93 cents. And this is what's going on with it, right? So in the 80s and 90s, folks, what used to happen is that gold companies would hedge their production. And that turned into a problem. This is a little bit different. Well, it's a lot different, actually. But somehow, and I don't know the whole ramifications of it, but I know what the trade is that they're in a trade right now, and they're basically a gold company, yet they put on a $440 million currency swap. And what has happened is that they're still taking out of the ground like 50 million, 60 million in gold every quarter, okay? But guess what? They can't handle the currency swap because they're in a losing position in an extraordinary way. And so what they keep doing is that they keep putting up more collateral. And that's just as dangerous as you can get, man. Do you know what I mean?
Yeah.
So, when I was looking at this, I said, what is wrong with this stock? And that's what it is, folks. And I haven't done enough work on it, but as soon as I saw the trade, you don't want to own any stocks unless they're trading companies that someone is trading. These guys just turned around and had a hire basically a trade to figure out what the heck they just got sold. They didn't just get sold. They got sold this a couple of years ago by Scotia Bank. But they're in trouble, man.
Yeah,
they're in trouble.
The chart is awful shaky looking.
It is. It's great. It's from $45 down to 90 cents. But that's what it is. They just had to come up with more collateral. The problem is I've seen more money lost, folks, by large companies. Somehow these bankers talk them into doing strategies that they don't even know what happens when currencies move. And it blows my mind because this is continual, folks. This is not like something that goes away. I remember the first one, and I wasn't even in the business. Like, I remember when Procter & Gamble was the first one that I ever remember. It was like 82 or 83. They lost millions of dollars. It might have been only millions then, not hundreds of millions because it was so long ago. But I remember saying, and I wasn't even in the business. I was saying, why would Procter & Gamble have, why are they trading? And this is the same thing. Why, did this company get into a swap? The way that it normally works, folks, is that these bankers lay out a strategy, they make big fees on it, and somewhere inside of that, they claim that it's a no-brainer. You know what I mean?
Yeah, dangerous. Thank you.
But yeah, it is, man. It's this, and this is really a shame because they have a mine. This company, folks, has a mine in Nevada that's worth big money. But guess what? They got to get the money to get it up, and right now they don't have that money. So.
Yeah, well, sobering. That's a good heads up. I'll steer clear of this one.
Just let it be for a while. We'll see what happens with that. Hopefully they'll straighten it out before they run out of money. But it's that dire right now. They had lost $75 million on a credit line. They pulled the $75 million. I think they had to come up with 22%. Let me see, 22%. Yeah, they had to come up with 22% of. They had to come up with $63 million. So out of the $75 million, I think they gave the bank 63. Now, that would vary, okay, because it's just like you and I trading. It's a mark-to-market.
Yep.
But think about it. Why is a gold company or any company trading in a mark-to-market? Trading, period. They're in a gold business. They should stay in that business.
You got to stick to your knitting no matter what it is. Yeah.
That's it, man.
Wow. All right. Hey, enjoy your weekend, Tom.
Okay, man. Have a great one. Have a safe one. Yeah, it's shocking, actually, folks. The thing that's shocking about ANV, okay, is that ANV, when it was first out there, was run by Bob Buckham. And, Buckham had, done really well. And then he leaves, and it's like, man, I'll tell you something. After seeing for some reason, the stocks that Buckham leaves, you want to get out of like immediately, because KGC, if you remember, he was the CEO of Kenros, and he told us live on the air, folks, okay, that when he was in Russia, he was basically going to shut down his risk in Russia, because what had happened is that this is when Putin had just taken over all the districts. He was sitting down. They said they're going to change the rules. He had already had $35 million in there or something. He was putting more money in, and bottom line, he said, nope, not going to do it. Then the board of Kenros didn't like what he said. He left. Bottom line, we know the rest of the story with Kenros. I mean, Kenros is going to basically, if they ever get those mines open in Russia, Putin's just going to sit there and basically, let them mine all the gold and then take it all. The difference, by the way, too, there's a huge difference inside the mining business versus the oil business, because what happens in the oil business, folks, you can get in and out, get out. 60 days, you get a well down there, you drill it, it's coming out. The mining business, what happens, you're talking 8-9 years to get a mine open. You're talking about a couple $1 billion. And you can see politically how politicians could say, yeah, no problem, we'll sign this, we'll sign that, and all of a sudden, once you get it up and going, see ya, don't want to be ya. So that's a large issue, no doubt, in the mining business, in business in general, dealing with different countries right now. In the news aspect, all over the place, it's saying that Merkel and France wants to make a deal with Putin and Russia. Guess what, folks? There's going to be no deals. Putin is not going to deal. That's the bottom line. If there's a deal to be made, what's going to happen is that he's going to put his flag up in the Ukraine, Europe's going to back off, and that's it. The rest of this, folks, is pure garbage. They're dealing with someone that knows how to kill. Whole different ball game. He's not talk. He's going to go in for it. You stay right there, folks. We're going to be coming right back. Dow Industrials finished, they're down 78. Nasdaq's off 24. S&Ps are off 5.5. We're going to be right back.